Today, I want to answer the question, what is a tax delinquent property? By the end of this video, I'm going to explain to you exactly what a tax delinquent property is, but also how you can utilize it to your advantage to make money in real estate as an investor. You've probably heard the term tax delinquent property, but might not know exactly what that means or how you can take advantage of that as a real estate investor. But did you realize that there are thousands of tax delinquent properties out there in the United States right now? And have you ever wondered how seasoned investors cash in on these tax delinquent properties? Well, stick with me as I dive into these questions by first explaining what property taxes are and how they become delinquent. I'll then explain what happens if somebody stops paying their property taxes. And finally, how you can cash in on tax delinquent properties. If you're ready, let's go. So what is a tax delinquent property? Now, in order to understand that, we have to understand property tax. If you live in the United States, you understand you pay taxes on everything from the food you eat, to the income you make, to the gift that you are given, or even if you're inheriting money, you're taxed on all that. The government wants their money, and owning a piece of property is no different. You're going to pay a tax on that. The property tax is essentially just a due that is owed to the taxing authority, and they utilize that money to build nice things for the community like schools, libraries, roads, parks, things that will enhance the community. And every single year, the government sends out an assessment to the property owner to say, listen, your property is worth this. Because it's worth this, you're going to owe this much in property taxes, right? So essentially, it's just another expense you have as a homeowner or a real estate investor. Because when you buy a home and you get a loan from the bank, you're going to owe principal and interest to the bank. You're going to owe insurance to the insurance company, and you're going to owe taxes to the taxing authority. All that combined makes a mortgage payment, right? And typically most mortgage companies, they're going to pay out and distribute the insurance to the insurance company and the taxes to the taxing authority. But what happens if somebody is not paying their property taxes? And I get it. It might be tempting not to pay your taxes, but honestly, Uncle Sam is going to get his pound of flesh. They have recourse for you not paying any type of taxes, especially property taxes. And you got to understand there's a huge risk involved there if you're not paying your property taxes. But walking through this scenario, let's say that you or somebody you know doesn't pay their property tax. Typically, the government is going to send out a notice, say, listen, you owe this property tax. And they'll send out another one, potentially another one. Eventually, if the property tax isn't paid, that governing authority or taxing authority is going to put a lien on your property, which essentially says, listen, we have first right to collect this money that's owed when this property is sold or if it goes into foreclosure. And many times that lien supersedes some of the other liens that might be out there on the property. How long can you go before the property is sold and you do not own that property anymore? Typically, it's 1 to 3 years, right? Each state, each governing agency is a little bit different, but typically within 1 to 3 years, eventually that taxing authority is going to sell your property or sell the tax lien to recoup the money owed to it. They don't want to be in the real estate business, right? They just want their money. So how can you cash in on these thousands of properties in the United States that are delinquent on their property taxes? Well, first off, you got to find them. And there's a couple ways to find them. I love utilizing resources that are out there. There's some free, there's some that cost money. One of the easiest things to do is go to the county office or call the county assessor's office and ask if there's any auctions for tax liens or tax deeds in your area, right? Now, each state's a little bit different. Some states are tax deed properties, some are tax lien properties. But finding out when those auctions are can definitely put you on the right path to find these properties. Another great resource is a website called bidforassets.com. Bid, B-I-D, the number 4, assets.com. And it's state by state where you can find auctions that are going to be happening. And typically those auctions are happening all the time, right? And some are a few months out. And you can plan to attend those auctions and be one of the bidders out there. Understand you're bidding against other real estate investors, so it's going to be a competitive market. The other tool that I really love to use is an off-market property search tool. Now, it does cost money to utilize this, but it is a fantastic tool where you can actually query and filter your property search in any area in the United States and query them by tax delinquencies to be able to find some of those properties. Now, those are the ways that I find tax delinquent properties, but once you find them, that's half the battle. Once you find them, you go to the auction, what's the next step? Now, obviously understand you're going to an auction, right? So you've got to have cash on hand. You've got to be prepared to purchase the property if you're the winner. But before you bid on anything, you've got to do a little bit of due diligence and research to make sure that you understand home values in the area. You've got to understand that there's going to be some added expense, not just the purchase of the property or the tax lien certificate. that you're going to have to put into it, whether it's real estate attorneys, whether it's closing costs, and maybe even some rehabilitation on the property to get it presentable and be able to get it to where it can be sold to somebody else or livable if you're planning to live there. But you have to have a solid understanding of the area to make sure that you're not picking up a lemon in a bad area and turning it into a bad investment. When you've done all of your research and you're prepared and you've got money on hand, you've got to be able to execute and close on the deal, right? Typically, when the auction closes and you're the highest bidder, there's going to be some money you got to pay right then and there. And then you might have 1 to 2 days to satisfy the balance after the auction is done. Whether that money comes from you and you've saved it up to buy this home, or it comes from a private investor or a bank that's willing to loan you money, you have to be prepared with cash or a cashier's check to be able to buy that property if you're the highest bidder. Now, I love finding tax delinquent properties. It's a great strategy, one that I've done before, but there's other strategies in real estate, and one that I'm really excited about that I'm doing right now, and I'm focusing most of my efforts on this, is something called cash flow flipping. You might have never heard of it because I've coined the term and come up with it, but it's an amazing strategy for creating cash flow every single month, as well as creating wealth. And it can be done by anybody in any market, in any market condition. And if you want to see the full video on exactly how I do this strategy, just click on the link below that talks about this strategy of cash flow flipping. Thanks for stopping by. Have an amazing day.